Hey traders, it's Heather, and we just wrapped up the last day of July. What a great month this has been. I'm really hoping that we can continue this positive momentum into August. And when I say positive momentum, I'm not necessarily talking about the market continuing to go higher, although that would be awesome if it did. I'm just more talking about our positive P&L because our balance keeps getting higher in the small lot trading room and my personal account balance. And so, yeah, I'm really hoping that August gives us as many opportunities to make some great trades as July did. So in this video, I'm going to show you how we rounded out the month with an amazing 0 DTE trade in SPX using, of course, the QuantPivots, one of my favorite indicators. So what I'm showing you right here is the daily chart of SPX, and then these lines, let me switch that. These lines right here are the monthly QuantPivots. So this one right here is the H1 for the month of July. So what does this mean? Well, it just means that typically price is going to stay in between the H1 and the L1, which is this first red line and then this first green line down here. It's typically where price is going to stay. And then when it gets above one of these levels or below a low level, what we usually see is price come back within what John Carter likes to call the sandbox, which again is this area right here between that first high level and the first low level. So it pretty much did that. Now it did, you can see price made 4 attempts to come above that little baby attempt right there, to come above that monthly H1, which is sitting at 63.93. And then today, July 31st, it made another attempt. It actually gapped up overnight due to Meta and Microsoft earnings. So we gapped up, we opened up at 64.27. Now this is when using the QuantPivots really becomes magical, because when price goes beyond one of those levels, you can make a bet that price will reverse. And as long as your risk to reward is solid, then that's usually when you'll find me taking one of these trades. So let me show you what the odds of this working are. So we're going to look up here at the monthly periods, and then we're going to see that it only closes above the H1 on the monthly QuantPivots 22% of the time. Now that's analyzing 9 periods. That's not very many. I bet you if we were to go back even further, we would see even greater odds. But still, 22% of the time it closes below that monthly H1. So that's pretty good, right? I mean, that's telling you that about 78% of the time, price is going to close below that level. And sure enough, it did. So when price was up here, and actually what I'm going to do now is I'm going to break this down to a 5-minute chart so that we can zoom in and I can show you exactly what I did. So you can see that we gapped up right here at the open up to 64.27. We did get an immediate sell-off. That's pretty typical when you see a big gap up like that, especially from an event like earnings where a lot of people are holding a particular position. It's not uncommon to see some immediate profit taking, and that is exactly what happened. So we did get a slight bounce, and this is right where I sold a call credit spread. So here was my ideas. I knew that I wanted to sell the 63.90 calls. And where is that? Right there. because we had that powerful level at 63.93. So the odds were good that we would close below 63.93. So in order to take advantage of that, I sold the 63.90 calls. I wanted my risk to reward to be really good too, not just the odds of it working, but I wanted my risk to be lower than my reward. And I got a really good risk to reward on this one. So when I sold these calls, I sold a 5-wide vertical. So what that means is I sold the 63.90 calls, and then I bought the 63.95 calls as well, just to limit my risk. So because it was a 5-wide, I was able to collect $390 in credit, which meant that my risk was only $110. Now, if you're in a larger account, you can absolutely take advantage of this move right here and day trade out of it. Some of our members in our small lot trading room did decide to do that because they, for whatever reason, they either have a larger account, even though we're in the small lot trading room, or they did have a day trade to burn. You do get 3 a week. So we did have some of our members close it out, use a day trade, and collect partial profits. My plan, however, from the beginning was always to let it cash settle. The risk to reward was so good, basically risking 1 to make 4. I'm happy with that. And of course, once again, my odds were good. So I was perfectly happy to just risk my entire capital that I put up for this trade of 110, let it cash settle, see what happened. And sure enough, we did get the flush. We ended up closing down at 63.39 on the day, well below that level of 63.93. So I get to keep that entire credit of $390. Not bad for a day trade, especially in a small account. And if you would like to see how we do this in the small lot, I'm going to link in the caption below. I'm going to add a link where you can try out our trading room. We have a trial offer. It's only $7 to be with us and hang out with us for 30 days. I'm also going to put a link to the QuantPivots down in the caption so that if you would like to use these on your charts, you can. One of the cool things about QuantPivots is that they work on any chart and any time frame. So I often will make a trade based off of the daily QuantPivots or the weekly QuantPivots. A lot of times if I'm intraday trading, if I'm just scalping, I'm not letting it cash settle, I'll use the 4-hour QuantPivots. So it's a really, really cool indicator. I do tend to use it on SPX more than anything else, but you can use it on any ticker, any time frame. One of my favorite indicators. I highly recommend that you add it to your charts. If nothing else, it just gives you a really good range of where price is likely to stay. So I hope you enjoyed this video. Make sure to like and subscribe and let me know if you have any questions. Thanks a lot. Happy trading.